Daniel said somewhere in 2017, you mentioned it's possible to make between 1 to 1.5% per month using the RPMs. In the succeeding years, has your experience with RPM been consistent with 1 to 1.5%? Pretty much, Daniel, around 1% or so for me. Ernie's RadioActive RPM return that he had in 2019 and 2020 was about 17% for the year. So he's pretty close on target for 1.5. I'm a little bit less. I've actually taken less positions in RPMs as I've been focusing on other strategies for both products and for our investors here. But yes, I still post my fusion trades at RadioActive Trading. I'm still close to meeting my goals. I'd say for 2021, Daniel, I may be a little bit under 1%. I think I'm at 0.8 maybe for the last 6 months since January in that case. Sorry, Daniel. I've still been doing that, but I know Ernie has. His RPMs have been hitting around the 17% annual return, so he's right in that wheelhouse of 1 to 1.5% very easily. Okay. All right. Now, that being said, Daniel, I do want to point something out. I'll take a look at two different things here, but I do want to point something out. Let's just go to SPY. We reviewed this a little bit, Daniel, and for a different discussion a few months ago. A few weeks ago, Daniel. My apologies. Let's go to a 6-month chart, beginning of the year. Year to date. Let's go year to date. I'm sorry. Well, we've seen some good movement, and my January and February did look really well. I got into Ally Financial around December, I think at about $48 or $49. It went as high as 56 somewhere in this time. Oh, you can't see that. Sorry. I need a new pen color. Great. Somewhere around here, it was up to 56 or 57. Lowered the risk on, doing income methods this way. Rolled up the put, lowered the risk. And then the last 3 months, what have we had? We've had this little hiccup, melting up, little hiccup, melting, bigger hiccup that we were just talking about Thursday, Friday, and Monday, and then sort of going in this melt up range again. This last 3.5 months is much slower growth than we've seen in the previous 3 months. It's been a good time to do bull put credit spreads. It's been a good time to sell. Okay, we'll talk about that later. This was not a good time. The last 3 days there turned out bad for some potential trades. In that case, excuse me, there were about 3 or 4 that started to move against some investors I talked to this week, and that's just the nature of the trade. But again, that 3 days of negativity, Thursday, Friday, Monday, and then starting to move back up really affected some of those strategies. But where am I going with this, Daniel? In a good protected position, this was a really good time to doing income method number 1, selling the call, income method number 6, and then occasionally seeing opportunities to use income method number 4 to move up the put to cut the risk by more than half. This was not a good time to be using income method number 1 because if it dipped down, you got a little nervous, you sold it to quickly just move back up, and then you'd have to roll the call here. That got me with Berry Plastics, actually, one of the 3 I'm in, 2 I'm in only right now. So 2 Mary puts that are posted in the Fusion portfolio for me right now. I think Ernie's got 4 or 5. And then this one here too, you can see this was a bad time to be in income method number 1s where I don't want to be assigned. I'm just trying to lower the risk on the position in that case. Okay. So where am I going with all this? I'm going with just as you'd expect with any strategy, looking at general market as a rule. And of course, some stocks perform massively differently than SPY here, Daniel, but you can get a good gauge of this was a productive time here. This has also been productive, but it's been more melting up. And that means slower growth, good way to get some income, but you're not getting as much premium because there's not as much interest. You're still able to lower risk. But the market as a whole for this 2-month period probably only moved up on average 1%, 0.8%. So if your stock's only moving up 1% over a 45 to 60 day period or 0.8%, you might not be seeing the 1%. But if you made 2 or 3% back here, you're averaging out to the 1.5% very easily. And with some of the movement here after, you probably got back and then gave maybe a little bit back here, but right back to where we were at the new highs. Okay, so that's my answer, Daniel. And Fusion subscribers and Blueprint owners are going to have more information about that next week. Finally going to post probably Monday, if I don't get to it on Sunday, something I've been promising for one of our Blueprint owners, Bill, the latest rendition of our Trust the Stock results, where we run the historical search over 6 months and 3 months using our default married put radioactive screen with our preferred criteria. So we take a look at this. I'm sorry, Daniel, 6 months. And then what we do is we change the search criteria. So what I do is I run this, I ran it on January 3rd or 13th, whatever it was, the date when I started this, to June 13th, and saw which 6 stocks matched the criteria, and then looked at their average return. And it was just this, no income methods, Daniel, was 6.1%. Then we change it, and we screen just against stocks in the same risk criteria, focusing on the same risk criteria that we use, same sort and everything else. But we just look against stocks that are in the NASDAQ 100, S&P 500, value line lists. We look for bottom feeders using the technical stocks that have hit a recent bottom that we're expecting to move back up. We use just technical screens and others. And we compare the returns of the 6 months trading performance of the stock and the return on the married put and determine which one wins. And as always, we see the same results. Many of our blueprint owners and investors who come across this search say, well, how can I increase the returns? How can I do better? That's why I do this test every 10 to 15 months to show that every time I do it, I can't beat it. I can't beat this. We do it on a 6 months performance and the last 3 months performance, and the default searches always outperform using those other kind of stock lists, using other technical indications and things of that nature. So we keep it. If I ever see a consistent level where a different type of filter is performing better than what we show here on the default screen, this is for married puts, of course, or even bull put credit spreads, which I look at all the time, we will make that change. Now, Daniel, when I say here, Daniel's follow-up question was how many trades one should be doing per month in order to reach 1.5%. I'm not talking about 1.5% on the total portfolio, Daniel. I'm talking about 1.5% on the trade. So I'm looking at all 4 of my trades that I'm in using income methods to try to get that target or that growth of 1 to 1.5% on each one. That's what I refer to when I say the 1 to 1.5%. When I'm allocating to that portfolio, I'm looking at 1 to 1.5% on each positions, not on my whole portfolio. The married puts make up about 45 to 50% of my total trading portfolio. All right, let's add a little snippet to that discussion with Dan. A little piece of Trust the Search results of 2021. This is going to follow up for those targets on the married put position. We just discussed the targets and what we feel is possible. Now, every 18 months or so, we run a test using the Power Options search for blueprint owners. We look back 12 months, 6 months, and 3 months historically using the default married put search. We show how the married puts, the stock and the put combined, just not the stock growth, performed over those periods. This includes no income methods. Then what we do is we change the criteria to see if we can do better than the default searches. And in several years of doing this, we have not been able to increase the performance over those time periods using different structures, stock criteria, or stock lists as well. Well, how does the test work? Well, on the back test on Power Options, we can select a screen for married puts on any selected date using any saved search we have on our fields. We get the results from that day that would have matched our default married put criteria, and then down below, we can hit the tab to calculate the group results to a selected date or all the way to the end of expiration cycle. Well, how did that 6-month test pan out? We ran the search on January 13th, 2021, the default RadioActive sorted by earnings per share growth screen. At the end of the 6-month period on July 13th, no income methods. 10 out of the top 15 were profitable trades, 67% success rate, with the average return of 7.3%. And that averages to 1.2% per month, right in that wheelhouse of the 1 to 1.5% per month. Now, that did beat the other changes we had made, and blueprint owners will have that full webinar soon. And it also confirms what we just mentioned for Dan. And if we just took the top 4 results of that search on January 13th, 2021 to July 13th, 2021, we would have had a 9.5% average return or 1.6% per month. There were some big winners in that list. American Express up 17.8%, Vertiv Holdings 22.2%, Blackstone, the big winner, 35.5%, and KKR company at 23.6%. Of course, there are some losses in there as well. But this is, again, not just the stock return. This includes the stock gain and any time decay or decline in the put option. So as known with the powerful married put technique, we do not make as much on the stock, due of course to the decline on the put when the stock goes up. But we lose much less on the losers due to the put option being in place for proper protection. What about that 3-month test going from April 13th through July 13th? Same search, similar success rate. 10 out of the top 15 were profitable trades. Average return of the 15 trades was 4.2%, including the winners and the losers, and not only the stock gain, but also any declines in the put options. Well, 4.2% over a 3-month period works out to 1.4% per month, still hitting the mark. But again, this doesn't include any income methods, or we're not recording any dividends that would have been received on those stocks during that 3-month period. So that return can be enhanced. Now, the total results, some winners and some losers. A big loser on Pinterest, PINS, was a 7.1% decline on the married put position. The stock fell from 83.90 to 72. That's a 14% decline, so we only lost half of what we would have lost on the stock itself. We do have some big winners in there. Crocs, Zotis, 27.3 and 13.8% respectively. Again, that includes the decline in the put with the gain in the stock, and a 13.2% return on Vertiv. And of course, losses are limited due to the control of the put, and the winners are still able to be achieved, and we're still hitting that target that we mentioned. The default married put search did achieve those targets. Where does that default search come from? It comes from the rules in the blueprint, of course, and the discussion of the 12 different income methods. But this brief test does not include any extra income from selling calls, doing those riskless spread trades, or adjusting the put option. And again, we didn't include any dividends that would have been received over that 6 or 3-month period. The test reinforces confidence in the default searches. It reinforces the targets are possible and what is possible with the limited risk married put approach. It reinforces the benefits of stock protection without giving up reasonable goals for profit. Now, the dates were selected based on a question that came in from a blueprint owner on July 13th about trusting the search results. We based the 6-month and 3-month target timeframes from that day. So January 13th to July 13th, April 13th to July 13th. Of course, past results are no guarantee of future performance, but as we can see here, even without the income methods used in the blueprint to answer Dan's question, we still feel confident, and we can see it's still possible to hit that 1 to 1.5% average return per month with the married put approach, and also adding the great protection to limit risk.